Hi, I'm Will Riggs. I'm one of the advisors here on the team at Strategic Retirement Solutions. And today I want to take a little bit of time to talk about why traditional investing rules may break down in retirement, right? Really, what I want to do here is to try to ask you to think about your thinking, right? Is everything that you've done during your accumulation years the same sort of things that are going to get you where you want to be during your distribution years, right? So let's talk about what's changing. The 4% rule. This is something that's talked about all the time, right? If you just take 4% off of your assets in order to cover your expenses, you will technically never have to dip into principal, and that is a sustainable withdrawal rate. That was built for average market conditions, right? And then if you look at the second bullet point there, when distributing assets, you're no longer able to buy the dip, and a negative sequence of return presents real risk to income plans, right? Those first two bullet points go hand in hand. And really, it brings into question what I think far too many retirees are potentially losing sight of, which is the lost decade, right? The dot-com bubble in the year 2000, followed by the mortgage crisis in 2008, really meant that in 2010, that 4% rule was destructive for many Americans and not a sustainable distribution rate if you were having all of your eggs in that one basket, right? The next bullet point there, inflation erodes purchasing power every single year, right? This is much more relevant now, I would argue, than ever. We've just seen recent reports come out to say that inflation is going to be higher for longer, right? We thought that some of these interest rate increases had done their job, but in reality, we're still seeing that pesky inflation persist. And it's something that needs to be planned around much more so than retirement planning situations 5, 6 years ago, of course. Market conditions in 22 and 23 showcase how bonds alone may no longer provide the buffer that they once did, right? Specifically here, if we talk about the 60-40 portfolio, another really popular kind of guideline along with a 4% rule, that 60-40 portfolio is 60 stocks, 40 bonds. In 2023, the 60-40 portfolio lost pretty substantially because both stocks and bonds fell at the same time and didn't have that inverse relationship that they often have, right? A lot of this actually came off the back of increasing interest rates to try to keep that inflation at bay. But bonds, especially bond funds, don't necessarily have the same principal protection as other asset classes. And so it's something that needs to be considered when we talk about greater diversification as you enter into retirement. We talk about what to do instead, right? One way to have confidence in retirement is to build guaranteed income or create a floor to cover your fixed expenses, right? Understand that no matter what else is going on in the rest of the world, that your needs are met. You've got a tank full of gas, a pantry full of groceries, and you are free from concern. The next piece there is keeping 2 to 3 years worth of spending in short-term conservative investments, right? We talk about the 3 bucket strategy. That's bucket one. That's how to make sure that you can sleep at night and, of course, be free from concern, like we talked about. Bucket number 3, don't underestimate your expenses and end up with an unsustainable withdrawal rate in year 1. Right? All too often, when we go through a budget exercise, I see folks forget about the what if expenses, right? What if we have to take a pet to the vet? What if we have to do home repairs? What if we have to repair a vehicle? These are things that need to be taken into account when creating your budget and figuring out what it is that you need to live off of. Then finally, review and stress test your plan, not just your portfolio. And here's where things really change is during your accumulation years, you have a portfolio. As you transition to retirement, you have to go from getting a paycheck every 2 weeks to creating your own paycheck. And that's when a plan is what's going to make that actually happen. So if topics like this are things that really get you thinking and you want to dive deeper about retirement strategies, I want you to go to retirementprotected.com, where we have a free educational webinar where I talk about topics just like this and many more. This is a no cost, no obligation webinar where, again, we get to dive a little bit deeper and really get you to start thinking about what's important as you make that transition from your accumulation years to your distribution years. Once again, that's retirementprotected.com.